All right, everyone, welcome to Growing My Wealth. My name is Kain Khalifa. I want to show you 4 trades I'm currently in with my VIP members for some currency trades, stock market trades. I've been investing in the markets, okay? We've been selling USD/JPY. We've been buying the S&P 500. We're selling the euro against the Japanese yen. And we've been buying the British pound against the US dollar. Here are some of the results of the members that have been sending me their results on Telegram. You can see exactly the same trades. This member, £727. This member has made himself £878. Look, guys, exactly the same trades that I've been sharing with you. All the members' results that they've been sharing with me are the same trades that I have been sharing with you, because the members are part of my VIP service and they're making exactly the same trades and making a lot of money. Look, this member made £4,500 profit, okay? And look, same trades, okay? So every screenshot I'll keep showing you are exactly the same trades. This member made £100. This member made a nice £878 for the euro yen trades he took. Okay, so the members have been making really good money. This member made £1,200. So what I want to do in this video, I really want to show you over on the screen, okay, a breakdown of why we're seeing weakness in the dollar and the euro, strength in the Japanese yen, strength in stocks. I'm even going to show you cryptocurrencies, okay? And what is the fundamental reason for these trades is all down to interest rates. We're seeing inflation come down in Europe. We're seeing inflation come down in the United States. And the markets are really betting on interest rate cuts in the US and Europe. And it's causing the currencies to weaken. So in this video, I'm really going to go through the spreadsheets that I use when going over macroeconomic and fundamental data to generate high quality trade ideas, so you can see exactly how I take these trades, what fundamentals I'm looking at, and really how to get some high quality trades when you're investing in currencies, stocks, commodities. It doesn't matter. The interest rate market drives everything. Bonds are key. So I'll be touching on the bond market in a second. So come over to the screen and I'll break this down for you. All right, everyone. So I want to show you 5 winning trades that I've been in with my VIP members, and that is buying Bitcoin, which has been going up in value, selling the US dollar against the Japanese yen, selling the euro against the Japanese yen, buying the pound against the US dollar, and we're also buying the stock markets for the S&P 500. And it's all being driven by interest rate expectations in the United States and Europe, okay? The markets are betting on interest rate cuts by the US central bank. Now, if you can understand why, it's very important. Inflation is finally on its way down in the United States. You can see inflation's gone from 6.5% down to 3.2%. And core inflation's gone from 5.7 down to 4%. Now, inflation going up was what was causing the dollar to strengthen in 2022 when the central bank was raising interest rates. And now that inflation is falling lower, you're seeing interest rates come down, and that's why the dollar's getting weaker. And I can show you this correlation between inflation and the central bank. Okay, so in March 2022, I'm going to show you what happened in the United States, okay? So you can see, if you look at the USD/JPY, and then we get the bond market on the right hand side, because if you can understand bonds, it will help you understand how interest rates drive everything, okay? So let me show you over here, when the Federal Reserve started to raise interest rates, you can see that inflation at that time in 2022 was way out of control, and the Federal Reserve in March 2022 started to raise interest rates, okay? Now I'm going to show you why interest rates are so important. So you can see here, March 2022, the first interest rate increase happened by the Federal Reserve from 0.25% to 0.5%. And then the Federal Reserve aggressively raised rates up to 5.5%. Okay, now look at the bond market that was pricing in these interest rate increases, and look what happened to the dollar and how the bond market can tell you whether the dollar is going to go up or down in value. Okay, so let's look at the USD against the Japanese yen, and we can see the dollar, soon as the interest rate increases happen around March, you can see the date at the bottom of the right hand side. Soon as the interest rates took off, when the Fed started raising interest rates, look at USD/JPY on the left hand side. Notice how when bond markets are pricing in higher interest rates, the USD/JPY goes up. Look at this, the moment the interest rate on government bonds start to decrease. So look on the right hand side, you can see it's at 3.19% over here. And when it decreases down to 2.6%, you can see immediately at exactly the same time, USD/JPY weakens. And as soon as the bond market goes up again in value, as interest rates keep climbing, look what happens to USD/JPY. It keeps going up. And then as soon as the bond market starts to decline again, USD/JPY declines again. And you can see, as soon as the bond market takes off, look at the left-hand side, that's exactly the same time USD/JPY takes off. okay? And you can see the USD peaked at 152 at exactly the same time when the bond market peaked at an interest rate of 4.34%. This is because Japan wasn't raising interest rates, but the United States was raising interest rates. So the interest rate differential was causing money to come into the US out of Japan, and that was pushing the dollar higher, okay? Then in October, inflation had peaked. I will show you actually my 2022 spreadsheet, and you can see in October, inflation had come lower, but in the past 3 months, it peaked in July at 9.1%, came down for 3 months in a row. So by October, the markets had confirmation that inflation had peaked and was coming down. And then the markets were betting on interest rate cuts at this point in March 2022. So they started to price it in. And look what happened. As interest rates on bonds went from 4.32% all the way down to now 3.73%. Okay, so a nice 1% move. What happened to USD JPY at exactly the same time? Look at the left hand side. You saw the dollar go down against the Japanese yen, okay, by around 10%, okay? But you can see when the bond market was at its bottom over here, the dollar had actually gone down by 15% against the yen at exactly the same time. Okay, so the bond market is always driving the currency markets. And then again, the markets got it wrong because the Fed did keep raising rates, and then you saw rates take off again here, and no surprise, USD JPY goes up when the bond market prices in more rates. And at this moment in time, why is the dollar getting weaker? Because the bond markets are now pricing in rate cuts again, because inflation's on its way down in the US. So look, you can see when we're looking at USD JPY in the bond markets are on the way down, as you can clearly see here, and the dollar's already started to weaken. This is a trade I took with my members. I'm going to show you all the results shortly, okay? And you can see here, the markets are betting. This is a spreadsheet that I use to know where the interest rate markets are going. And you can see the markets are betting for rates to go right now from 5.5%. And by the end of next year, it's going to be all the way down to 4.3%. 1% interest rate cuts are already priced in by the markets. And that's driving the dollar lower. So that's why we've sold the dollar against the Japanese yen. Because if inflation in the US just keeps falling, what's going to happen is the markets are going to keep pricing in those interest rate cuts, and we're going to see a weaker US dollar. So the more inflation goes lower, the more the dollar gets weaker, because the more bond markets price in those rate cuts, and the US loses its advantage of higher interest rates compared to Japan. Okay, this is the other reason why we took this other trade. I took with my members a trade, the Great British Pound against the US dollar. Notice the same thing happening, guys. Okay. Look at the pound against the US dollar. When did the pound start to rise against the dollar? After the bond market had peaked. That gave the pound the room to maneuver higher. And we saw the pound go up. And then when did the dollar start to strengthen again against the pound? Because look, during the period where bond markets declined, that's when the pound was able to strengthen against the dollar. Soon as bond markets went up again, the dollar strengthened against the pound. And as soon as the bond markets have gone down again, now the pound is getting stronger against the dollar. So it's all about interest rate expectations, because that's the key driver for the currency market. So what we're seeing right now is the bond market pricing in rate cuts. The pound is pushing higher. That's why we bought the British pound against the US dollar. All right, so that's some really good trades. If you want to understand this, it even feeds into the stock markets. Stock markets doing exactly the same thing. Notice how the stock markets was declining from its peak when interest rates started to go up. And then as soon as the interest rates hit their peak, stock markets bottomed. And then as soon as the bond market started to decline, stock markets went all the way up until when? As soon as the bond market started to rise again, stock markets went down. And recently, we've had a situation where the bond markets are going down and stocks are going up. The most important thing to understand about stocks, interest rates on mortgages, credit cards, car loans, student debt is all pegged above the 10-year government bond yield. So when the US bond yield is going up, that's why the stock markets are going down, because investors understand straight away that people can't spend as much money because their mortgages, credit cards, car loan payments, student debt payments are all going up. So companies are going to earn less. That's why when the bond market was pricing rate hikes, higher interest rates, stocks were going lower. Investors were selling stocks. And as soon as the bond market started to price in rate cuts, then the markets immediately started to buy the stock markets, betting that spending will increase. So at the moment, the reason the stock markets are going higher is because the markets are betting on rate cuts. What would that mean? Lower mortgages, lower credit card payments, lower student debt, lower car loan payments. So stock markets will rally higher. That is the expectation. That's why I'm buying the stock markets. That's exactly why I'm buying Bitcoin. If you want to learn something really interesting, Bitcoin and stock markets move at exactly the same time. Because you see that correlation I just showed you? It's exactly the same with Bitcoin. When did Bitcoin start to go lower? When interest rates started to go up. When did Bitcoin hit a bottom? When interest rates hit a peak. As soon as the interest rate market started to price in rate cuts, look at Bitcoin rally higher. And then look, as soon as rates went up again, what did Bitcoin do? Bitcoin went lower. And as soon as the bond market's gone down again, Bitcoin's rallied higher. Okay, I just invested another £20,000 into Bitcoin the other day for this understanding, because interest rates drive the crypto markets as well. Same reason. People can't spend as much money because their credit cards, car loans, student debt, mortgage payments are going up. They can't buy crypto as much. There you go. Now you understand why crypto moves at exactly the same time as stock markets. So that's why we've been buying the pound against the dollar, the yen against the dollar, because a weaker dollar is driven by lower interest rates, and the stock markets and crypto also go up when interest rates go down. Okay, and then we've also been selling the euro against the Japanese yen, because the euro's hit a peak and the euro is going to get weaker now, because also the markets are betting that the European Central Bank, the ECB, look, is going to cut interest rates as well. So Europe's advantage of higher interest rates over Japan has come to an end. All right, so I shared these trades with the members, and you can see, look at the results, exactly the same trades I've been showing you. This member made £1,600. This member, same trades, made £745. This member made £2,000 profit following the trades. This member made $2,300. Danny made $424. This member made $3,000 profit. Michael made a nice £1,330 profit. This member made $1,600. So now you understand bond markets and interest rates drive currencies, stocks, and crypto. Really important. You want to come and join my VIP members? Message me. Come and get involved. You can follow these trades. Okay. I've even got some recent ones with members who have been trading Bitcoin. So this member used my accelerated funding service where I helped him get funded over 115K. And you can see the results right there, where he's made 7,000 profit on the same trades I've been sharing. He literally sent that to me 313. It's now 338. So he's made $7,000 today off his funded account. Beautiful. All right. Message me if you want to get involved.